welcome to episode 105 of Mo Money, the investing economics show for millennials by a millennial, where our goal is to educate, entertain, and increase the financial literacy of a whole new generation. I am, of course, the host of the show, Mo. Now let's get to the money. As we discussed last week on the Mo Money Market Update, there is a lot of volatility in the stock market right now. February to mid-March was a very bad time for the stock market, only to see it come roaring back 30% recently and posting, as many of you may have seen, one of the best weeks in Dow history, even amid deteriorating economic data. Times like this makes a lot of investors very nervous as they try to figure out what's going on and are barraged with vague, meaningless headlines like stock market up on coronavirus cure hopes, stock market down on employment numbers, but the most accurate description would be nobody knows what's currently going on. And uncertainty makes people very uneasy. People like certainty, even when it's bad certainty. Like the Joker says in The Dark Knight, nobody panics when things go according to plan, even if the plan is horrifying. When people panic, they do stupid things like sell all of their stocks in their portfolio. Now, this may seem like an obvious thing to do. If the stock market is going down and you sell your stocks, in the short term, you probably will save yourself, a pretty good amount of money, 10, 20%, maybe even 30%. That's huge. And you'll tell yourself, well, when things get settled, I'll put the money back into stocks. The problem is nobody's going to tell you when to put your money back in. And by the time they do tell you, you've probably missed out on a 20, 30, maybe even 40% gain in the stock market. And you'll tell yourself, well, this is just a little bump. I'll still, people are out of work and this is bad and that's bad and it's going to go back down. And, once everything is, for sure good, I'll start buying then. And then 2 to 3 years later, the cash you had from selling all your stocks during the uncertainty has probably lost value and you've missed out on 20, 30% returns. So when is the best time to buy stocks? I'm here to tell you that the best time to buy stocks and invest is now. It was also the best last week, the week before, and the week before that. Buying stocks consistently is the best strategy, not just buying all at once or when you think times are good. I know you're saying to yourself, oh, money, why should we listen to you? Aren't you the same idiot that bought the ETF to triple short the stock market in 2016? Aren't you also the same idiot that mistook a brand of cookies and a racial slur? You're an idiot, and there are witnesses to prove it. My response to that would be, yes, you are right, but luckily in this field, I'm fairly smart, and there are people much smarter than me who have proof to support my claim. So why is the best time now to invest? Why was last week the best time to invest? Why was March 23rd the best time to invest? The answer is simple. It's called dollar cost averaging, or as some write it, DCA. Now, just a disclaimer, I know millions of people have currently lost their jobs, and talking about investing in the stock market now may seem insensitive, but it's an important lesson and an essential one for those who still have income to put towards investing to know. So let's start with an example. If you'd invested $100 in the stock market, and I'm going to use the Dow Jones for reference, from December 31st to February 12th, you'd have had $102. I know, $2 doesn't seem like a lot, but I'm keeping the numbers small so it's easier to understand. In reality, a 2% gain a month and a half is good. As of April 17th, that $100 would now be worth roughly $88, roughly a 12% loss. Now, if you'd invested $1 in the stock market every day since January 2nd on top of that $100, you would have roughly $104, meaning that your year-to-date return would be about 4%. Which is roughly 1% a month, which is a great return because the historical average return of the stock market ranges from 9 to 12% depending on which data you're following. So what's the lesson to be learned from this? It's quite simple. The more time and the more money that you put in the stock market, the better chance of having a positive return over the long run. Sure, that $1 you invested on February 12th is now only worth 88 cents, but the dollar that you invested on March 23rd is now worth $1.30. And all those dollar returns average out to a substantial return over the long run. Something that you will notice in 30 years. There's no, it was the best of times, it was the worst of times bullshit when it comes to investing. It's always the best of times to invest, and these numbers prove it. I mean, okay, sure, sometimes are better than others, but it's always better than not investing at all. Bottom line, I know you may be waiting for things to calm down. The market seems too crazy to invest right now, but as the wise investor Peter Lynch once said, the next 20 or 30% move could be either to the upside or the downside, but the next 100% move is definitely going to be up. And if you're sitting around waiting for the best of time, you may miss it. The Dow Jones bottomed in April of 2009, and in between then and August 2014, it surged 100%. I'm sure there weren't a lot of people in April 2009 thinking the next 100% move upwards starts right now. Nick Maggiulli of Ritholtz Wealth Management, a numbers wizard, writer of the blog of Dollars and Data, and who has written a lot of great pieces on DCA, especially the article "Even God Couldn't Beat Dollar Cost Averaging," said in a recent post called "Has the Dust Settled Yet?" Because just like a car speeding away into the distance, remember that by the time the dust settles, the car is long gone. And well, there's no way I could write a better ending to that episode than that. So, thank you so much for watching another episode of Mo Money. You can find new and classic episodes right here on YouTube. For now, don't forget to like, comment, subscribe, share, follow me on Twitter, follow me on Instagram, like me on Facebook. Mo Money, signing out.